Welcome to the D-Shift podcast, where we provide inspiration, motivation, and education to help you transition from the challenges of divorce to discover the freedom and ability to live life on your own terms. Are you ready? Let's get this shift started. Hello, and welcome to another episode of the D-Shift podcast. And it is always fantastic to have a returning expert who's going to share her wisdom with us. And that's what we've got today. So my friend Gina Phillips is back on. Gina was not only a best-selling co-author in The Other Side of Divorce, the compilation book that a bunch of us women got together and wrote, but she is also a certified divorce financial analyst. And Gina is the founder of WNY Divorce Financial Advisors, LLC, and she works with people in divorce in New York State, but then she also works with women post-divorce on their financial stuff all across the country. So that's what we're focusing on today is post-divorce financial stuff that you need to be aware of. So Gina, welcome back.
Thank you for having me again. I love speaking to your people. I think it's so important that we educate ourselves, not just during the divorce process, but after, because you've been through such an emotional roller coaster of a ride. And sometimes it takes 6 months and sometimes it takes several years. So you really want to make sure that you're getting a clear picture of, I'm divorced. Now what do I need to do?
Yeah. And that's what I think is really important about this podcast, this post-divorce financial stuff, because what I see is there's a lot of support for people up until they get the divorce decree. And then the divorce decree has a whole bunch of stuff that needs to happen. And all of a sudden it's like, oh my crap, I thought I was all over. I was finished with all of this. And in many ways, it's really just got started. And there's challenging things like, and again, my limited knowledge is there's things like QRDOs that have to be completed within a certain amount of time. If you miss doing that, you may find that that part of the retirement plan that you thought you were going to be able to just access is going to become a nightmare for you. So, Gina, before we get into all those details and talking about all that stuff, why is this so important from your perspective? I know you talked a little bit, you just briefly touched on it there, but what do you see as the biggest challenges?
Well, I think that a lot of times, in the majority of the time, it's usually the woman who's not really educated on what needs to be done. And I have seen several circumstances as I've been in this business where people didn't have access to their money because they didn't do the proper procedures, or they couldn't keep the house because they didn't know they had to establish their own credit or have proof of the child support. And it was written in the divorce decree, I refinance in 60 days, which is impossible to do. So I think my biggest thing is to really educate people and to not forget those little things after the divorce is done.
Yes.
Because, I think that we said, it's done, I'm free, but really, you really now have to establish your own financial identity and make sure you do have your own financial identity. And I think that's the biggest key. And go ahead.
I was going to say, and sometimes, we go a little, I'm not going to speak for everybody. I'm going to speak for me. Sometimes when we get money, maybe we've been so frugal, we've been skimping and saving and trying to get through and paying for the attorney fees and paying for all the professionals and maybe not getting much support with a lot of financial stuff during the divorce. Now, all of a sudden, you get a lump sum payment. It's like, I'm rich. And I go a little money crazy where I just go, I've always wanted this and I've always wanted that. And we make bad decisions with that money. And a lot of times, like you say, once you make those decisions, there's no coming back from some of these. So let me pick your expert brain here. What's the first thing you think people, or women in particular, post-divorce need to think about?
I think their living situation. So did they sell the house and get that money? And are they going to just do an apartment because they're not sure where they want to go? Or if they are buying out the marital home, how much time do they have to refinance? Because some states require you to have proof that you're getting child support or maintenance. to buy out your spouse. So, and once you do get a mortgage in your own name, make sure the quick claim deed is also transferred over. I recently talked to a friend of mine whose in-laws were divorced for years, and he was getting ready to go into assisted living, and he never got off the deed. So I mean, just those little things, and that's one reason why I have a post-divorce checklist, which I'll have available to everyone, just to make sure you're not forgetting to do those little things. So you need probably a mortgage broker, or if the house is paid for and you don't have to, make sure you hire the right attorney to make sure that quick clean deed is done and the property is now in your name. Because your living space or having a place to live is probably one of the most important things, especially if you have children that you're trying to keep in a school district, or just keep on the same path so they're comfortable in their circumstances. So I think that to me was my key, was
Yeah.
for me. But like you had mentioned, a qualified domestic relation order, which is dividing the retirement assets. If you're getting divorced later in life and you're in your 60s, you might need that money to live on. So that's another procedure that a lot of people are misconceived of. What do I do with that? You need a separate lawyer. You
Right.
need to pay some fees. Is it in your settlement agreement? Who pays those fees? And how does that process work? Because each pension, or if it's a government pension, there's different forms and different requirements. And it could take a year or more to get those retirement assets.
Now,
So
yeah, so I want to go because you're such an expert. And and I have a limited knowledge. So let's go back and touch on a couple of the things that you've already talked about, Gina, if you don't mind. That whole idea of the mortgage and the title to a property, those are two separate documents. And you
correct.
can have the mortgage in your name, but that doesn't affect the title. That's a whole separate thing you got to do. And this does have an impact because I actually had heard from an attorney a horror story of a woman who inherited the house. It was a very beautiful house. It was in a very wealthy neighborhood. It was way beyond my price ratio in this house. Let's put it that way. And she changed the mortgage over, but did not change the title. And the insurance stayed on with him because he was on the titles, and that was the agreement. He was going to pay the insurance for X number of years. Well, the house burned. Long story short, the house ended up burning. And because he wasn't living there and his name was on the title for the home and on the home insurance, she was not allowed to collect. And the insurance also wouldn't pay him because it wasn't his primary residence. So what ended up is this huge house went up in smoke and nobody collected on the insurance. That's an extreme case, but that's really important to think about, right, Gina?
Exactly. You really need to take your settlement agreement and make sure it makes sense. I've seen some settlement agreements where I'm like, why is that in there? You know what I mean? And where I'm going to refinance in 30 days. You can't refinance in 30 days. There's so many different things, especially now with the way the market is and everything else. It's not an easy process to do. So I think that is an extreme, and you really need to know when you are signing that settlement agreement that this is binding. And if not, you're going to have to go back to court and get adjustments, and that could be a whole nightmare.
Yeah.
And I think that's the biggest thing. The other thing that's very, very important is making sure the beneficiaries, that like your ex-husband isn't listed as a beneficiary of your insurance, life insurance policy, and that your will that you wrote when you were married is void once you get divorced. So you really need to have another estate plan in place. And that, I had a situation, another friend of mine, husband died suddenly, very suddenly. Okay. They had been divorced a while. She didn't, he had a New York State pension. She felt, oh, I'm not going to water the bridge and get the quadro done. She had no clue how that worked, really. and he died suddenly. Well, her daughter was 21, her son was 19, and the youngest was 14. Who was the next of kin? Her daughter. Who had to pay for the funeral expenses? Her. Her daughter
Right.
didn't have the money. And then they waited. They waited because he didn't properly change the beneficiary to what it was supposed to be in the divorce, in the agreement. It took her 3 years to get the money that was really entitled to her and her kids.
Right.
You know, so if you have those proper documents in place and you have the education behind you to make sure you're doing things right, 3 years. Her
Yeah.
child support and maintenance stopped, you know?
Yeah. On the death of a spouse, on the death
Yeah,
of a payee,
and she had
stops.
to put
Yeah.
6,000, the funeral expenses on her credit card. She was fortunate that her youngest was eligible for his Social Security, but
Right.
that's only a period of time,
Right.
So you have this plan that I'm going to get child support till he's 21 and the maintenance, and it's going to cover the mortgage, and then suddenly everything stops.
Right.
That's huge. And
Right.
I think, I had another client of mine who said Cobra, continuing health insurance. She goes, "Oh, he won't cancel my insurance." And I'm like, after so many months or years, it's canceled. She
Right.
didn't know that. She went a couple of months without health insurance. And I
Right.
think, I think there's a lot of misconceptions out there. And I know it can be overwhelming for someone that didn't process all the financial data. But here is your chance to empower yourself and really take control of your finances.
Yeah, and so I'm glad you brought up that Cobra. I want to go back to Quadro, but I want to talk about Cobra now. So Cobra is basically a stopgap where you pay the insurance to your spouse's company, or your spouse pays it to cover you until you get your own insurance. And in reality, with the various options available today, Cobra could be very well be your most expensive option. And so sometimes it doesn't make sense to even agree to that Cobra if it's going to be counted against you in the cash settlement or in the disbursement of the assets. So you really have to look at that, right, Gina?
Oh, absolutely. I know myself, I went and got a part-time job right before my divorce was final so that I could get insurance through my employer. I had to pay for it, but it was still a better option for me. And now there's open marketplaces in certain states, and depending on your age, you might qualify, for depending on your circumstances. But you really need to educate yourself. Just because it's the best insurance, it might not be the best insurance for your circumstance now. Now,
Right.
you really have to research those things prior to signing the settlement agreement.
Right.
And I think once the settlement agreement is in your hands, put it aside for a few weeks and then really look at it, and say, what are the next steps I need to take so that I'm completely financially free from this marriage?
Yeah.
And I think that's key. And I think that sometimes you've gone through this expensive battle, like you said, with all the attorneys and numbers and everything else, and you're like, I'm done. And you're not done. You
Yeah.
need to take those necessary steps. Or like, even if there's something for the future, like maybe it's that your children's college education will be paid for. Well, what does that look like? Is it specified?
Right.
Or if the kids are young, was car insurance and cars and all that stuff addressed in there? Then make sure you're getting those funds, because
Right.
a lot of times people get divorced and then they don't want to say, "Oh, I don't want to do this," because it's okay. But you really need to, if you want to have a financial future yourself, you really need to take ownership of it.
Yeah.
And that's what I'm saying.
Yeah.
Education is key.
So let's go back, just because I think we touched on it really briefly, and I have, like I say, a basic understanding. You have a very advanced understanding, but it's a lot of gobbledygook to a lot of people who have never heard it before. And that's that whole idea of a quadro. Can you talk about what a quadro is, when it comes into play, and why it's so important to make sure you understand when you have to get paperwork in and done by?
Okay. So you usually can't get a qualified domestic relation order until after the divorce is final because it's written in there.
Right.
And usually it addresses either a pension or a 401k. IRAs can be just transferred without a quadro. Um, Government pensions have different forms, but it's similar process. Okay. And what you really need to do is you need to go to an attorney who specializes in doing quadros. And generally they charge a flat fee. So it depends on how your divorce decree is written. Sometimes the fee is split. Sometimes you're responsible if you're taking it from your husband. So you really need to address that because it can cost you, several $1,000s just to start the paperwork, and it's important to do that as quickly as possible because you want to make sure that your spouse signs off on it and that it's it's done. And I've had several women reach out to me that they were divorced in the 80s and doing and they were lucky that they had the paperwork.
Right.
So I
Right.
think that that's one of the most important things besides getting your property in your own name is making sure that if you are entitled to retirement assets, that you follow the necessary paper trail to get those done.
Because what that quadro does is it tell the plan manager, okay, this person has $200,000 in this 401k, and that plan manager has to get that paperwork so they could say, okay, I'm now going to split this and transfer 60,000 of that to
Right.
person B. And
Right.
you can't just take your divorce decree and go, look, the judge said. The plan manager needs to see that legal document to be able to do it, right?
Absolutely. And especially, I know because I'm in New York State, the state pension system has certain criteria of when you can divide it and who's entitled to it. And if they've already taken a certain buyout, you can't so
Yeah.
there's complications in there. So you really have to make sure that you can do it. And then there's been pensions that have failed, and
Yeah.
so you really want to do that as quickly as possible to protect your future interests.
Thanks
um,
for clarifying that,
you
Gina.
know,
Yeah.
so I mean, if the divorce decree is final, within a month, I would be talking to a lawyer that specializes in qualified domestic relation lawyers. Generally, your attorney should be able to recommend somebody local that they feel comfortable with, that process the paperwork. But you've got to have people sign off on it. It can be complicated. It can take a year. I mean, I actually I did during the pandemic. I did it myself, a YouTube with a lawyer talking about some of the common mistakes that people do make with it, because you really need to make sure the plan can be divided too.
Okay.
Like,
Gina,
so those,
let's
yeah,
make sure that we get that so that I can put it in the show notes, and I'll link that YouTube. So if people want to see your interview with the attorney, they can just click on the show notes.
sure.
Yeah,
Sounds good.
let's connect those. So let's touch on one other thing that I see more and more commonly in divorce decrees, where the spouse that is paying support, alimony or child support, because all divorce decrees upon the death of either spouse, the stuff ends. Now, if not, obviously not child support if the children are still alive, but if any alimony ends or spousal support ends on the death of either spouse. So a lot of what I'm seeing is a buffer or a cushion is being placed on there in the divorce decree with the requirement of the paying spouse to carry a life insurance policy that lists the payor spouse as the dependent. And that might be for 200,000 or it might be for $1 million. I don't know. It's whatever, right? Whatever makes
Right.
sense for the family to cover that gap in, if you die and the child or the spousal support stops, at least that person's got a cushion of X amount of dollars.
Right.
So that all sounds fine and dandy. So right after the divorce, typically that person has so many months or so many days to get that life insurance policy in place and provide you with proof of insurance. So they send it to you and you get it for the first year. And then the month after they send you that proof of insurance, they just stop making payments. So how do you continue? Like what are the pros and cons of having that as an option?
Well, hopefully your spouse wants to take care of the children and and I know myself, I had it written in my divorce decree. I asked every year. I never saw it. I mean, and I understand that, but like for example, like the the example I gave you, I mean, she was lucky because he was a New York State pension and he was still working, so she did get the benefits of it and everything. But it's hard, and you in certain states too, like in New York, even if your spouse was listed, you might have to change it after the divorce. So really talk to your insurance agent that specializes in this type of insurance to make sure that the beneficiaries are listed correctly, the payees are listed correctly, and maybe you can get a copy to show that it's enforced. I don't know if you can write it in the divorce decree. I am not a lawyer, so
Right.
I don't know what can specifically how much needs to be spelled out regarding that. But especially when you have young children,
Yeah.
that is very important and very key.
And I do see some of my clients, and again, I'm not an attorney, I'm not an insurance agent, and definitely don't take any of this as legal advice or financial advice. It's up to you to do your own research, talk to your own professionals in your state, jurisdiction, or area. But one of the things that I'm seeing is that the spouse that's carrying the insurance can designate that the annual renewal form, or the term renewal, or any notice of discontinuation of payment is automatically sent to the beneficiary, who would be the receiving spouse. And so that kind of takes a lot of the pressure off. But here's my thoughts on that. If your ex-partner is willing to sign that, they're probably not going to default on it anyhow, right? It's the one
Right,
that won't sign
exactly.
anything that you've got to worry about.
Right, right. And that's the key. And that's why it's important for you to now do an estate plan too,
Right.
to protect your children, anything, your children or your property, to make sure that it's what you want to happen
Right.
after the fact. I think that's really important, that once you have the divorce, you really need to protect your family that way.
Yes.
That's really key, because I've seen a lot of people pass away without any wills or any estate plan, and it's really a nightmare for the people they're leaving behind. And it
Yes.
can be very overwhelming. It could take years, especially if there's property involved. And I know that's a scary thing. Oh, I'm doing my will, but it's really, you're really doing your family a favor by taking care of those things as
It's
soon
a
as
gift.
possible.
It really
It
is a
is.
gift. I mean, it's not morbid. It's you take car insurance out. You're not expected to get in a car accident, right?
Right.
And this
Right.
just, like, I like the way that you said it. It really just provides that comfort to the family to get their finances quickly. And in some states, like I know in Texas, dealing with the death of my husband, depending on how well drafted the will is, you can actually skip probate, which means that you're going to not get stuck for months or years waiting in probate court. If there's no disagreement, if everybody's cool with the will, then it can go through quite quickly, which is another important thing to consider if you have minor children or dependents.
Right.
Yeah,
And make sure the beneficiaries are changed on your insurance policy too. You
right.
don't want to keep listing your former spouse, or
Unless
you
you want
want.
to. I mean, you might want to, but
Well, it depends on how old your kids are, because
right,
maybe you do want him, that if you're, you maybe your children are younger, so maybe you say, if they're, so I mean they can't get it till they're 18 in most states too. It depends on the state.
right.
But I mean, you want to make sure that you're taking control over your finances.
Yeah,
This is on you now.
yeah,
You've been in a marriage. Now this is on you. You can show financial stability. Make sure you're checking your credit report. Make sure that you've cleared all the debts that were part of the marriage. That's important too. Make sure there's nothing hiding out there that wasn't addressed in the divorce decree, or are you responsible for paying some of the marital debts? You want to take care of those things so that you can be or even in some cases, there's tax liabilities too. So you want to make sure that you have a clear picture of what you are responsible for now that you're on your own.
Yes, thank you. Gina, is there anything that you think is important that we haven't covered? Did we miss anything for this post-divorce?
Insurance. Uh, and also, like if you do decide to go back to your maiden name for Social Security purposes, I think that's important too. So if you do decide to go to back to your maiden name, make sure everything is changed. Make sure all the bank accounts, credit cards that might have been like an authorized user. Let's see. I'm trying to think now. We went
Everything.
all over.
I know, and we may have to have another one of these after we get off and think about all the things we didn't talk about. But
Right.
everything, like your passport now, you got to have real ID, so you got to make sure that you're doing that. And it can be very long and very complicated to go back to your maiden name. If you do it in the divorce, though, it is free, right? In most states, that's just part
Right.
of the divorce.
Right.
But then
Right.
that's all they do is say you go ahead and use your maiden name. Now you've got to go to every department, every government agency that you do business with and
Right.
change it.
And the one important thing is that if you were married over 10 years in a marriage, you still could be entitled to your former spouse's Social Security depending on the circumstances. So that's key. So make sure you keep that Social Security number tucked away somewhere too, because when you go in to collect your own Social Security, you can either see what's better, half of his or my full.
Yeah.
And then there's also possibilities of bumping up to your former spouse if unfortunately they pass away, and things like that. So that's another thing to make sure that you keep in the back of your mind, even if you're young, that hey, I was married 15 years, he always made a lot of money, or maybe he passed away, as long as you don't get remarried, or if you get remarried, if you're divorced again.
Yeah.
So just make sure you educate yourself on what am I entitled to from a Social Security standpoint
And
also.
that can change all the time. So if you looked at it 10 years ago and your ex-spouse has recently passed, don't assume that information from 10 years ago is still accurate. Go talk to somebody who knows this.
Right, go to Social Security and reach
Yeah.
out to them to see, because they should, like there's certain time frames. If you didn't get remarried before you're 60, then you could collect on your former spouse. So they're changing, you've got to know the rules, and it's very complicated when you're dealing with the former spouse situation. So that's why I say go to Social Security and make sure you're educating yourself before you just take, oh, all yours, or my spouse dies and I can,
Yeah.
bump to theirs now.
Yeah.
So I think that's key too.
So, Gina, we have covered a ton, and I mean it, a ton of information here, and probably not in the level of depth that some people are going, wait, what was that? Wait, I have to do that. So, if you got some questions, email me and I'll create a list, and then we'll have Gina come back on and answer those at a later date. But
Right.
Gina, out of all the information we've shared, or you shared, and I've asked questions about, what do you want to leave as a thought at the top of everybody's head?
You know what? You can do this, and to continue your journey of peace after a divorce, just educate yourself. If you don't know an answer to the question, just don't put it off. Get the answer. Find a professional that can help you answer the question.
Wonderful. And as you can see, Gina is extremely knowledgeable on this and post-divorce stuff. If you have questions, don't hesitate to reach out and talk to somebody who has that level of expertise. I highly recommend Gina, by the way, but there are other professionals. If you think, oh, I want to work with somebody that lives in my state or whatever, that's fine too. But Gina, if people do want to reach out and work with you or read some of the amazing resources you have on your website, or follow you on social media or whatever, what's the best way to stay in touch with you?
I have a Facebook page, WNY Divorce Financial, or you can email me, Gina at WNYDFA.com. I gladly take a phone call too, just to see, to guide you in the right direction. I like, 15, 20-minute phone calls just to make sure that you are being educated and that you can, you can take control of your financial freedom at 716-633-1605.
Great. I'll make sure that's in the show notes, and make sure that you grab Gina's gift that she mentioned at the very beginning, the post-divorce checklist, and for post-divorce financial checklist, right? Am I saying that right, Gina?
Yeah, it's post-divorce financial checklist. Yes,
Yeah.
yes,
And
yes.
because, like I say, and like Gina said, these little things that you need to do afterwards aren't going to take a whole lot of time. But once you get them in place, you're going to feel so much more confident and in control of your financial situation. So, Gina, once again, thank you for sharing all your expertise and wisdom here today.
Thank you for having me again. I love being on here.
And thank you for listening in. I hope you've learned as much as I have, because every time I talk to Gina, I learn something new about finances and divorce. And if you have any questions about future stuff, email me, marty@poscs.com, and let's make sure that we chat again on next week's podcast. Thanks for listening and supporting the D-Shift podcast. If you would like to attend live trainings by our amazing guests and have a chance to ask questions and get answers from our experts, join the D-Shift crew. For more details and to sign up, head on over to www.divorcecoachforwomen and click on the podcast page.